This is our second class on taxation. Just before we get into the new material, I'm going to quickly go over what we looked at the last day. What is taxation? We said it was a levy imposed by government on individuals and businesses. Basically, it's a charge that individuals and businesses have to pay to the government. Why do they pay it? Well, the government needs that money. Obviously, they provide essential services for the people, education, health, public infrastructure. Obviously that money is needed, and we get that money from taxing people. Redistribution of wealth, we looked at before, even for things like social benefits. If you're somebody who's unemployed, you're somebody who has disability allowances or something like that, the money needs to come from somewhere. So we generally, obviously, something like PRSI, we can tax people. The more they earn, the more they pay, and that money that we collect then can go towards paying other people's social benefits. And discouraging consumption, we'll look at that. For obviously we're trying to discourage consumption of some things like alcohol and cigarettes, and then to do that we basically just tax them. And you've noticed that every year in the budget there is an increase in tax put on items such as that, and now the non-eco-friendly items are kind of being taxed in the same way. We have direct and indirect taxes. Direct taxes come out of your income. Indirect taxes come out of your spending. Direct taxes are things like PAYE, comes out of your paycheck. Indirect taxes is VAT. If you go up to the counter and pay for something, you'll pay tax on that item when you pay. Taxes paid by households and business. VAT, as I said, what you pay for something when you buy it. Your car tax, capital gains tax when you sell an asset, and custom duty when you import something from outside of the EU, and that is becoming more and more relevant right now with Brexit. Taxes paid by both households and businesses. Excise duty, alcohol and tobacco, things like that we're trying to discourage. We put an excise duty tax on those. Carbon tax is putting as well. That's a kind of a newer one coming in. On products that emit carbon into the atmosphere. Obviously we're trying to become more eco-friendly, so the more you tax these things that are damaging to the environment, people will look elsewhere. Money talks, so that's how you'll get people to turn towards environmentally friendly products, is by taxing non-environmentally friendly products. And PRSI, we said, is insurance that we charge for everybody, comes out of your paycheck and that money goes towards social benefits. Taxes paid by households only. PAYE comes out of your paycheck. It's pay as you earn. Again, the more you earn, the more you pay. Self-assessment income tax, if you're self-employed, if you are a sole trader or partnership, you own a barber shop, or you're an electrician, and you work for yourself. At the end of the year, you have to tell the government how much you earned, and then you have to pay tax based on a certain percentage of that earnings. USC is Universal Social Charge, again similar to PAYE and PRSI. Paid by all employees and self-employed, and generally there's certain bands. So for example, if you don't earn 12,000, you don't have to pay it. There's certain bands after that in terms of how much you actually owe. DIRT, we said this was a tax on savings. Deposit interest retention tax. Local property tax is a tax you pay on your home, on your residential property. And CAT, capital gains tax, or capital acquisitions tax, sorry, is taxed on gifts and inheritance. So if something was passed down to you in an inheritance, from a will or something like that, there would be a tax placed on that item unless you can find a loophole. There's a very funny story about that actually. There is a program that I saw recently, and it happened a couple of years ago, where there was two friends, two men. One of them was in his 80s and the other was in his 50s. And basically the man that was in his 80s had no family, and he was coming to the end of his life, and he knew that he needed to pass on some of his belongings and some of his wealth to his friend. But because he was passing it on to his friend, the money was going to be heavily taxed. So he got married. So the 80-year-old man and 50-year-old friend, two heterosexuals, they got married, and the sole reason they got married was because there would be less tax involved, because as a married couple, passing on gifts, or passing on any form of inheritance, anything you own, isn't subject to tax like passing it on to somebody else. So because he was giving away all of his wealth when he died, because he was giving all that money away to a friend, he was going to be heavily taxed, so they got married. I can put a link to that elsewhere, just you may have heard of it at the time. It's a interesting story. Taxes paid by businesses only. So corporation tax is a tax on a business's profits, and it's 12.5%. Ireland is quite an attractive corporation tax, 12.5%. Elsewhere abroad, it's much higher. The corporation tax basically is that if a business makes €1 million in profit in a year, they will lose 12.5% of that to corporation tax. So it depends on what your profit is. So when you calculate your profit, you have to take 12.5% of that, and you pay it to the government. Commercial rates. So commercial rates are levied by the local authority in a firm's property and are used to finance local government services. So commercial rates are generally just given to business properties, and that money goes towards things like paying for public lighting from the streets, upkeep of the area, and things like that. So what we're doing here with commercial rates is that we're setting aside these rates, we're setting aside the money, and we're generally kind of putting that money back into the area, putting the money back into, you know, footpaths, roads, public lighting, and other things like that for public infrastructure. There are two taxes that are paid only by businesses, and we had looked at those 6 paid only by households. Taxes are quite important, being able to distinguish between them. It's very, very important to be able to know what they mean, especially for short questions. Easy marks. Paye system, and we just have a couple of slides left, and we're going to be focusing on the Paye system. So every person employed in Ireland is subject to tax on their income. It's Paye, pay as you earn. So if you don't know that, again, take down Paye is pay as you earn. We'll be focusing on Paye modernisation. So what we're looking at here is basically how Paye is calculated. This is a new slide. I'm going to get you to take down this one about taxes paid by businesses only. You don't need to take down this one. Paye modernisation. So to reduce the paperwork with employing people and ending basically with employing, hiring and firing, we have a Paye modernisation. Again, you don't need to take that down, but you do need to take this down. So what does Paye modernisation means? So when somebody starts working, when they're commencing their employment, they register with the revenue commissioners using their PPSN. They create an online account and enter details about their employer. So if you haven't started a first job yet, I suppose, apart from any maybe cash in hand jobs, if you haven't started any kind of employment yet, when you do start, you will have to contact the revenue commissioner. You'll give your information to your employer and they could set up your account for you, or you could contact the revenue commissioner yourself. You'll give information like your PPSN number about your employment, where you're being employed and how much you're working and things like that. And they'll just kind of keep you a track of everybody's employment. The good thing is that they calculate your tax bands, your tax credits. They see how much money you are to pay in tax, and it's constantly updated at the end of the year. Maybe you might be owed tax, and you can go on to the revenue.com, and you can basically file for a tax kind of rebate, tax return. So during your employment, they sort out your taxes with the Paye modernisation. You can log onto your account, obtain information on the amount of taxes you've paid, and check to ensure the correct tax rates and tax credits have been applied. And at the end of your employment, well, you don't really have to do anything. You cease your employment with the employer. The employer tells the revenue commissioner when you finished, and then when you start your new employment, all that information is there for you, or for potentially for social welfare if you were to claim job seekers allowance. So I need to take this down again. The writing might be a little bit small. The PowerPoints are up on Google Classroom, and you'll be able to see the writing there. Maybe zoom in a little bit more. So Paye modernisation allows us basically, when we start our employment, we're onto the system. Type in they contact our employer, and obviously they input our work details on what job we have and what position we have. They calculate how much money that we should be paying in tax based on a certain percentage, and then once you're done, once you're finished, you're fired or you leave your job or whatever, Your employer tells this to the revenue commissioner what day you finished, and they just keep a running total of all your jobs. Last slide. I'm not going to get you to take down the whole thing. Benefits of Paye modernization, but I will be highlighting certain things now, and I'll be getting you to take those things down. See if I can actually. Do you know what? I put this in as a picture, so I can't highlight certain things. I'm just gonna have to tell you. I was gonna put some few things in bold, but it's an image, so I can't. So benefits for the employer. There is 5 different things here. There's a heading here to help you to remember them. SMART, obviously seamless, being S, minimize cost being M. You get the gist of it. So what do we mean by seamless? So I'm going to get you to write down just certain things. You can pause the video when you're jotting them down, but I'm not going to get you to take them the full thing, just a couple of words next to it. So what are the benefits of this new PAYE system for the employer? Well, information can be exchanged automatically. So information on employees can be exchanged automatically. I'm going to get you to take that down. So seamless, information on employees can be exchanged automatically. Again, you pause it whilst you're taking it down, and then you can play the video again. Minimize costs, less staff time taken preparing forms. So less staff time taken preparing forms. So you have to say for that, less staff time taken preparing forms. Abolition of forms. So basically we have gotten rid of forms like the P45. So I'm just going to get you to write down again the abolition of forms such as the P45. P45 is when you end your employment. So that was the kind of a saying before, that you'll be receiving your P45 is, and you'll be receiving a form to basically fill out and send to the revenue commissioner that you finished your employment. But that's no longer there. This modernization system obviously is just, there's a lot less work involved. So abolition of forms such as the P45. Right tax, basically you're paying the correct amount of taxes. And time saving, again, saves employers times from forms. Time saving saves employers time from forms. Again, you can add in P45 and P60 if you'd like. What about the employee? Again, this is the last slide. There's just a couple of things I get you to take down. So for the employee, what's the benefit for maybe us as employees, as workers? We can access the information easily online on the revenue website. So you can simplify it here. So what we mean by PAYE modernization being simplified, we can access the information easily online on the revenue website. Minimizing use of tax credits. We can monitor our tax credits during the year to be aware of how much you're paying and how much tax credits you have. Tax credits are there so that you don't have to pay all of your tax. If I was taxed €1,000 in the year, but I had €2,000 tax credits, that means it's basically like an allowance. I don't have to pay that €2,000. So if my total tax was 10,000 and I had tax credits of 2,000, I'll only pay tax of 8,000. The difference, you take away the tax credits. So you can calculate your tax credits during the year. Automatic review, end of year review of tax paid. Employees receive a tax refund if they've overpaid tax during the year. I would just maybe add in that there's an automatic end of the year review of tax paid, so that you don't have to go accounting for information yourself. There's an automatic end of year review for tax paid. Real-time reporting is quite similar to simplified. Is that you can go onto the revenue account online to see what tax have been paid to date. So employees can go onto the revenue account online to see what tax have been paid to date. And then transparency, I'll get you to take on the full thing. Employees can see the tax deducted by their employer has been paid to revenue. Just in case in the past, obviously, where things would have been a lot less monitored, that people could have been giving tax to their employer, and their employer wasn't saying anything. That's it. That's what we're looking at for today. We just kind of focused on PAYE modernization. Again, I just quickly wanted to go back over some of this information on taxes because it is quite important. From the slides we looked at today, there's only a certain amount of things I got you to take down from this slide. I got you to take down this in full, but not these two. But you were to take this one down as well on the taxes paid by business. Enjoy the weekend.